Good morning, everybody, and I want to say thanks very much to One for the opportunity for me to be able to talk about my project. So today I'm going to be talking about uranium. I think uranium is probably one of the few commodities over the last year that I think has done pretty well, and I think Lotus is in an excellent position to be able to take advantage of that uranium price as we move forward. Just before I jump into the presentation, what I normally like to show just on my first slide over here is really just a picture of one of our projects. So Lotus as a company has two uranium projects. We have the Kayelekera Uranium Project, which is located in Malawi. It's a past producing asset, operated for about 5 years between 2009 and 2014, and was shut down due to economic reasons. So that picture there is a picture of Kayelekera that was taken a few years ago, and I think clearly demonstrates the amount of infrastructure that is already on site, and therefore a very low capital restart for this project. And we also recognize, because everything has been operated before, there's a relatively short time period required in order to be able to bring this mine back into production. A couple of things just on the corporate side before I jump into the project. So according to our share price on Friday, we're valued at about 632 million Australian dollars. We have zero debt at this point in time. The pie chart there on the left-hand side there shows our current shareholder base. So significant retail sitting on our shareholder base at the moment, predominantly Australian as well, but starting to grow that into North America, into Canada, and also some European individuals getting involved in the project as well. Big boost from the ETF funds coming into the project as well. We had a significant rebalance occurring at the end of January, where we saw the Global X ETF buy heavily into our project moving forward. And we are starting to build up our institutional base as well, and hence the reason for coming to conferences like the One Project. So what is it about Lotus? What are we trying to achieve? Well, Lotus wants to be a uranium producer. That's where our focus is. We'll be a uranium producer, we hope, for the next 20 to 25 years. And in order to be able to do that, we have two projects that can deliver into that requirement. First of all, the Kayelekera one, which I spoke about, low capital cost up front, quick restart. But our second project, which is our Letlhakane project, which is located in Botswana, a much bigger project that can operate for a lot longer period of time, sort of a 20-year life of mine we're expecting from that project, delivering somewhere between 3.5 and maybe as high as 4.5 million pounds per annum. We therefore have a very diversified base in terms of our production and a long life associated with it. As I hinted at the beginning of my presentation, the uranium fundamentals have been the strongest for many years. In fact, the price today is the highest it has been in the last 16 years, sitting around the $106 per pound mark. 2 years ago, uranium was sitting in the low 30s. So it's trebled in the last 2 years going forward. The management team behind Lotus, lots and lots of African experience, lots and lots of operational experience, lots of project development experience moving forward as well. The team at the moment is relatively small. However, we are now starting the process of building that team up. We're looking to appoint various people in the corporate office to help us through our project development phases, help us with our financing strategies. But just as importantly, we're starting to build up the base at our assets as well. So Kayelekera is the mine, as I mentioned, we want to start up first. We're looking now to start building up that employee base on the mine as well. Sorry. So as I mentioned, the two projects, quick overview of each of those projects. Kayelekera, existing plant and infrastructure in really good condition. In fact, part of that plant gets operated every single year as part of our water treatment process. So I mentioned proven producer, produced almost 11 million pounds of uranium when it was operating previously, and all 11 million pounds was treated in the Western conversion facilities. So whether that be at Converdyn in the USA, whether that be Cameco's facility in Canada or Orano's facility in France, those three conversion facilities have all treated Kayelekera material before. And also, it's been nice to know that when we've been having the conversations with the various North American and European utilities, a lot of them have had Kayelekera material within their reactors before as well. So it's a well-known project from a utilities perspective, which certainly helps the negotiations around offtake. The mine itself, of course, has a mining license in place. We renewed that last year for another 15 years. It has its environmental license, it has its permits in place. So from a regulatory perspective, there is no issue to us starting this project up. We also have access to a skilled workforce. So all the previous operators on the mine, when that mine shut down in 2014, are still within the area, are still within Malawi, and are looking to come back and work on this mine as well. So a significant portion of the employees that we bring on to operate this mine will have worked there before, and we do believe that makes it a lot easier from a training perspective. Letlhakane Project, as I mentioned, globally significant, 190 million pounds of resource in that resource base there, of a grade of around 320 ppm. It's one of the top mining jurisdictions in Africa, and in fact, if you look back at the Fraser Index in 2022, Botswana was actually ranked number 2 in the world. Only Nevada in the USA was considered to be a better mining jurisdiction than Botswana. Again, the project itself, the previous owners of this project had got the mining license in place. We have an existing mining license. They put out a feasibility study in 2015, 2016 as well. And on the back of that, they were able to get an environmental license as well. So the base regulatory requirements are in place for this project. But I think one of the things that we really liked about this project and why we went through the acquisition process last year was effectively the infrastructure associated with that project. So the mine itself, or the resource itself, sits right next to the sealed road that connects Gaborone with Francistown. So it's right next to that sealed road. At the same time, there's a railway line that follows that sealed road. There is a rail siding that is actually within our mining lease boundary. There is a large substation within our mining lease boundary. And there is also a water bore field that we have the permits to abstract groundwater and the permits to install a water bore field as well for us to get water. So from a water perspective, from an access perspective, and from a power perspective, this project ticks all those boxes. And what we need to do as a company is to focus on that resource and see how we can convert that resource into an economic project. I won't spend a lot of time on the market there, but I think this is quite an interesting set of graphs. So this is the information that came out of the World Nuclear Association's report in September of last year, where they've given a forecast of what they believe the amount of electricity that will be generated by nuclear reactors is going forward. So in 2022, roughly 366 gigawatts of electricity was generated by nuclear reactors. The WNA expects the increase in power generation from nuclear reactors to increase by around 3.6% per annum. That means by 2040, they are forecasting something in the order of 690 gigawatts of electricity will be generated by nuclear reactors. Now, as a company that's going to be producing uranium, what we're specifically interested in is how much uranium will be required to feed those reactors. And even if you look at the 2022 numbers, you'll see in 2022 there, the green bars on that bottom graph there, the amount of uranium required by those reactors is 169 million pounds. Yet primary production, so that is production coming out of the existing mines, only produces about 130 million pounds. That gap is made up by secondary supply. And secondary supply is specifically inventories, but also what they call underfeeding in the enrichment process. Now, because the various utilities have been pulling down on their inventory levels over the last 10 years or so, those inventory levels are getting dangerously low. They will not be able to rely on inventories moving forward. At the same time, because of Russia's invasion of Ukraine and Russia being one of the world's most significant enrichment suppliers, you're now seeing that this concept of underfeeding in the enrichment system, which is also a way to generate more uranium, is no longer possible. And all of the Western enrichment facilities are moving away from underfeeding to overfeeding, which means you can no longer rely on the underfeeding concept to fill that gap. The only way you're going to be able to fill that gap is with new mines coming online to be able to deliver it. And when you look forward to 2040, when I spoke about that 686 gigawatts of electricity, those reactors will require 335 million pounds of uranium. Yet today's mines that are operating, when you look at their production potential in 2040, will only be producing 65 million pounds. There is a huge gap there that is required where primary production needs to come online to fill it. And Lotus is one of the companies that will be there to be able to do that. Again, just the spot movement. I mean, the spot price over the last couple of months has almost gone vertical. It's almost impossible to keep up on a daily basis with where we're going on the spot market. There has been some talk about whether this is a bubble. I'm not convinced of that, to be honest. I think the prices, the uranium prices, have now reached levels where they need to be in order to be able to induce companies like Lotus and other companies out there that have got projects to be able to induce them to make their final investment decision and come online. This is just a little bit of how we see our two projects fitting together and how we see them delivering into that gap that I spoke about. So as I mentioned, we've got 190 million pounds of uranium at Letlhakane, 51 million pounds at Kayelekera, giving us a total of 241 million pounds of uranium. I will add that the 241 million pounds of uranium makes Lotus the third largest uranium resource on the AISC. Only Paladin Energy and Deep Yellow have got more resources than us. We're the third largest on that on the AISC at the moment. Bottom graph there shows how we see those two projects coming together. Obviously, Kayelekera, as I spoke about, near-term producer. The blue bars there represent the production rate that came out of our feasibility study that we announced to the market in August of 2022, averaging around 2 to 2.4 million pounds per annum of uranium coming out of Kayelekera. That's relatively strong for the first 7 years, but does drop off towards the end of the life of Kayelekera as we move away from mining from the pit, because we've effectively depleted all the ore there and are actually starting to recover material from the stockpiles. But that's where the opportunity of Letlhakane comes in to fill that gap. And what we're trying to present over here is a concept that Lotus Resources will be a company that will be delivering uranium into the market for the next 20 to 25 years. Just some really high-level economics for the project, just to see how strong Kayelekera is at the moment. So Friday's spot price, $106.50. If we consider that to be our potential revenue stream, we have cash costs of around $30 per pound at Kayelekera, an additional $8 to get us to our all-in sustaining costs, which means we have a potential margin of around $68.50 for Kayelekera. At our 2.4 million pound per annum production rate, that means we generate an EBITDA of somewhere in the order of $160 million US per year. Our capital for the Kayelekera restart is very low. We're talking around an $88 million worth of upfront capital to be able to start that mine up. That means we have a payback period of less than 1 year for Kayelekera. So really strong economics for the project. I'll talk a little bit about the steps that we've got for the next 6 months in terms of expected news flow coming out of the both projects. So as I mentioned, Kayelekera, primary focus at the moment. What are we doing with Kayelekera at the moment? We've done all of our technical work. We're quite comfortable of how we're going to go about restarting this mine. We're quite comfortable about some of the changes that we need to do on the mine in order to deliver a more economic project. So we're focused more around some of the corporate activities. We're busy at the moment on financing. We're about to appoint a debt advisor to help us with the financing strategy. We do recognize that at today's prices and with those economics that I showed you, Kayelekera can carry a significant amount of debt, and we'd like to test that in the market and see what we can actually get from our debt perspective. But we do know from a financing perspective, equity is out there for us at the moment, and we would certainly expect to receive a large portion of our required capital through equity. But we also know that the utilities out there are also quite keen to do prepayments for production. So this would be a forward payment on the uranium that they would receive. So we're busy with our financing strategy to see how that will fit together. Offtake is taking a lot of our time as well. Busy negotiating potential offtake agreements with North American, with European, and also some Middle East and South Korean utilities as well. We have a mine development agreement that we're negotiating with the government of Malawi at the moment that will set the fiscal regime. So we're looking for some concessions around tax rates, around duties and tariffs of imports. And then also we're starting to move towards our operational readiness. So we've got a feed program that we're about to kick off. One of the important things that we've done in terms of being able to reduce the operating cost of the mine is connect the plant to the national grid. So we're busy talking to the Malawian utility about that. Just talking about Letlhakane. So as I mentioned, this is a much bigger project, got a much longer timeline associated with its startup. We think we've got about 3 years worth of technical work ahead of us before we're in a position to make final investment decision on Letlhakane. But there's a lot of work we would like to do in the near term. So we're looking at that mineral resource estimate that they've got, that 190 million pounds at 320 ppm. Can we try and tighten that up, try and increase the grade? We've got some technical work streams we've started as well. What about beneficiation? We were very successful at Kayelekera on beneficiating our ore. So we increased the average of our run of mine material from 600 ppm to 800 ppm being sent into the mill. Can we do a similar thing at Letlhakane? I believe we can. And for that reason, we're looking at those beneficiation test work programs now. We plan on putting a scoping study out towards the end of this year that'll show the market exactly how we see this project being developed. And then we also have an infill drill program planned as well for Letlhakane. A lot of that 190 million pounds is actually in the inferred status. So we'll be doing an infill drill program to get that up to measured and indicated status. I'd like to thank you very much for your time and for your attention. Thank you.